Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day. Romaine Bostick here alongside Caroline Hyde and Taylor Riggs, counting you down to the closing bell, and here to help take us beyond that bell, our global simulcast with Carol Massar and Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse what happened and what happened today. Carol, we saw the biggest year-over-year increase in consumer prices in a decade. That's rattling folks a little bit here.
Yeah, and no volatility, right? When they went down, the equity markets, they went down big time, and we're just pretty much hovering near our lows. I mean, the question at this point is, inflation, there's the base effect, there's higher commodity prices, there's also supply disruptions. The question is, does this persist a lot longer? Is it not transitory? Today, Tim, investors, at least equity investors, they're saying not transitory.
Yeah, we're seeing quite the sell-off, especially when it comes to big tech names and tech stocks. U.S. equities taking a leg lower toward the end of the day today. Quite a reversal from what we saw yesterday, especially with tech stocks seeing that recovery. Those inflationary fears driving those companies particularly lower, Taylor.
And the SMH, that's the ETF, of course, that tracks the SOX index, now approaching that 200-day moving average. Caroline, the SOX index from its most recent high, now off more than 13%. So you're getting a very big pullback. And Sherry Paul, Caroline, I think really nailed it. Some of this, of course, is rising yields and profit taking, but it really is, how are we looking at these future cash flows? How much is priced in already into these markets in these long duration assets?
And talking of rising yields, guys, looking at the U.S. 10-year currently up 6 basis points. We managed to get that auction away, the 10-year debt being sold and actually taken down pretty well. But this steepening of that yield curve, this forcing of the Fed's hands, it's going to be interesting as to how much of that gets priced in, certainly from the break-even.
168 right now on your 10-year yield. We should point out the Bloomberg Dollar Spot Index up 0.7% here on this day. But, of course, everything else is down. We're going to the closing bells here. You got the Dow Jones Industrial Average below 34,000, 33,587 here. That's down about 682 points, down 2%. The S&P down 2%. The NASDAQ indices, both the composite and the NASDAQ 100, down about 2.7%. And the Russell 2000, the small caps here, down about 3% on the day.
Yeah, which makes you wonder, guys, when we get the producer price index number tomorrow, whether or not that just kind of weighs increasingly, Taylor, once again, on the markets, whether or not just kind of puts more fuel on the fire, the inflation fire.
You want to talk about fuel, Carol? I give it to you. Come and take a look at where we are on a sector level on days like today. For the radio audience, I'll just put it nicely. It doesn't look good. Every single winner is still in the red, except for energy, 0.06 of a point in the green. And energy, of course, is the story coming off that CPI data, you guys, frankly, that we've been talking about all day. And the massive amount of drop in supply, big boost in demand. What does that mean? I take you down to the losers because that, unfortunately, is where all the action is happening. I have to just bring you down for a radio audience. You're off 3.7%, 3.8%, pretty much 4% for autos and semiconductors. Carol, used trucks, used cars, they gained 10% on a month-over-month basis. How much of this is that chip supply? The automakers feeling it, the chip makers really feeling that supply squeeze today.
Well, Hertz is saying thank you very much for that chip squeeze because, man, check out Hertz Global. This was just a knockout stock today in terms of gainers. Right, look at that number. And all of you, we've been reporting on Hertz for years, but I mean, go back a year ago, and this was a company that was shut down because of the pandemic. And then all of a sudden, everybody wanted to rent cars, Caroline. And so you saw when this company went out to go out for bids, I mean, they were able to find a bunch of interested companies, and they're coming out of bankruptcy.
Retail wins out, hey, suddenly, Carol. I mean, all those diamond hands there in Hertz managed to actually sort of be the last laugh to a certain extent, if they bought at the right price, Tim.
Yeah, that's true. I mean, look, I think at the end of the day, it takes you back to last summer and thinking about kind of the beginning of meme stocks and the beginning of the way that Robinhood traders got involved. And that's really was one of the names was Hertz. And who would have thought that they would come out with this outcome?
Meanwhile, I mean, we're looking across not only at what's happening in terms of the gainers, in terms of the decliners, Tim, but I'm looking across asset as well. Quickly, we've been talking so much about commodities. Tim, stay with me on this because I'm looking at the inflationary pressure that was still built into commodities today, right? We're seeing steel up 0.9%. We're seeing, of course, some of the iron ore prices just plumbing to new highs for our radio audience. I'm looking at zinc, though, actually taking a little bit lower, off by 1.2%. Romaine, we've all been talking about palm oil on the day. Even our sacred chocolate hasn't been helped thus far.
Yeah, I mean, obviously you guys keeping an eye on palm oil. We should really go back to some of these major indices here because the declines that we saw, you were talking about it just a second ago here, Taylor, here about those chip stocks.
Yep.
Seeing the Philadelphia Semiconductor Index down 4%. Not only do you got the S&P falling the most since February, but you got a lot of these indices closing now below a lot of those key technical averages. The NASDAQ Biotech Index, which of course was the high flyer, that's below the 200-day. First time we've seen that in more than a year. Apple, a stock that we've been keeping an eye on, that also touching its 200-day moving average. Right now, kissing that at the close. First time we've seen that since April of 2020.
And you mentioned there, of course, the chip makers, if you're down 13% from a recent high, that is more than a 10% level. When we talk about big, significant corrections and pullbacks, we'll highlight yields, of course, because this really was the story as we think about, Carol, the CPI data that we got this morning.
Right.
What does it mean in terms of how we reevaluate some of these valuations? Yields, though, and this is an important point, rising on the day. So this is a bet on future growth, future inflation. Yields are rising faster than maybe people thought. Carol, this isn't a risk-off day where everyone gets nervous and panics.
Why didn't we see a bigger move here in the Treasury market today, though?
Well, that 170 level has been a key resistance level on the overhead, Carol. And I think that traders are trying to figure out, do we believe the Fed, or is the market pushing back on that Fed narrative for a little bit?
I mean, it does feel like to some extent what we're seeing in the Treasury trade pretty orderly. And this is, I think, Tim, it plays into this whole idea that we knew the economy was going to be reopening. It's pretty steep, though, in terms of some of these numbers. And certainly when we get an inflation number like we got today, it's just a reminder that we fell off a cliff a year ago, but we are bouncing back pretty dramatically.
We are. And look, Michael McKee was on our show earlier today. He was on Bloomberg TV earlier today. And he made the point of saying, hey, basically, don't read too much into these numbers because of they're essentially reflationary. I mean, you mentioned used cars. You mentioned also rental car companies. This is a sign that the economy is reopening. The thing to watch, guys, it's wage inflation.
Yeah, not just Mike McKee as well, talking to that point, but Rich Clarida, of course, happened to be speaking at the most permanent moment. And we can actually listen in to what, of course, Clarida of the Federal Reserve, the vice chair there, was saying in terms of, well, he was surprised, but he's not worried. Take a listen.
Readings on inflation on a year-over-year basis have recently increased and are likely to rise somewhat further before moderating later this year. Under my baseline, I expect inflation to return to or perhaps run somewhat above our 2% longer run goal in 2022 and 2023.
Romaine, you had the tweet of the day for me. What is transitory?
Yeah.
You always had the tweet of the day for me, but what today in particular?
I thought you were going to talk about the appearance of Bootsy Collins on our air. Congratulations to that. Key milestone here for Bloomberg News. But in all seriousness, there's a disconnect here between what we're seeing in the equity market and what we're seeing in the bond market. Clarida hits the point really well. You heard similar comments from Romaine Bostick, and you saw that reflected in sort of the muted response, not only with regards to what we saw in Treasury yields, but remember, break-evens really didn't go up, at least the long-term break-evens didn't really accelerate to the extent that some people would have thought. Yet this is then a day here where you have one of the worst days here for equities that we've seen in months, in some cases, in certain sectors, in over a year.
You want to talk about what was selling off into the close, Romaine, as we continue to get more headlines from the fundamentals. It was Sonos, of course, which is coming out with earnings. They are now jumping almost 6% after boosting their full year guidance. Caroline, we have second quarter revenue well above expectations, $333 million versus estimates of lower than $250. On the bottom line, 12 cents versus a loss that was expected of 48 cents. So you are seeing an improvement on the bottom line. Adjusted EPS as well. So you're really getting that forward guidance that looks much better than expected. That is a theme that we continue to see.
All right. Also watching Bumble in the after hours because swiping right investors. The stock's up almost 8% here.
Nice.
Went public in February of this year. First quarter EPS, we're looking at $1.69. First quarter revenue, Caroline, coming in a little bit above expectations, $170.7 million, $164.5. Also giving an outlook, fiscal year revenue of $724 million to $734 million. That's above their earlier estimate of $716 million to $726 million. First quarter paying users, 2.8 million. So people may be getting back to dating.
Yeah, it was the summer of love. That's what Match said last week. And it seems as though Whitney Wolfe Herd, of course, a female-led business, recently went public with Bumble, saying the same sort of thing. Vroom, we have got to talk about second-hand cars today. It speaks into our inflation story. Vroom coming out with its first quarter revenue, $591 million, just ever so slight, well, actually a significant beat over the $517 million that was estimated. Adjusted loss per share, 57 cents. The estimate was for higher than that, and they see their second quarter revenue at 618 to 640 million. That is better than estimates overall, Romaine. So we push higher by, wow, 12%.
Yeah, and the expectations were pretty low for that company, particularly with some of the price pressures that we see in the used car market. And you talk about inflationary pressures. That's where you saw it. It was interesting. You had Carvana report last week. They actually were getting hurt by that. Apparently, Vroom doing a little bit better.
All right, guys, we're going to leave it there. That's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again tomorrow, same time, same place.